yet in lockdown, I'm afraid. And how's she coping? Laughing, of course.
I'm laughing. I got to laugh, Geoff. You can't do anything
Yeah,
else.
the alternative is not that good an idea, I guess.
Oh, look, it's not been pleasant, and the numbers are still not great, and we are doing what we need to do, which is hanging in there.
Yep.
Because
how do we approach the week ahead?
So we go back to the charts. Gosh, let's have a look at gold. I'm going to just grab that off Ash. Thank you, Ash. And we're running, hot and running. Look at gold. Thank you for a very bad numbers report. Isn't it sad that I actually I'm happy when I get a bad numbers report, because we had this beautiful push up on gold as the US dollar took a nosedive. So Friday night, bad jobs report. And look, we've had one of those weeks again where if you look at the last 3 weeks over here on my 4-hourly chart, and we knew when we're coming back up into this level that we were going to hit a lot of resistance coming up, back up through. I didn't think it was going to go. I didn't feel gold was going to go back down at this moment, despite the seasonality and the light on emphasis on the Dolly Cott data. But having said that, we haven't also done a fabulous job at all keeping to seasonality. And that's the thing with seasonality. And as much as I love it, and I always refer to it as much as I can, it's a bias, and it doesn't always pan out the way we'd like it to. So just always keep it in back of your mind when you are trading. It's not an entry signal. Having said that, the bad, and one of the reasons we've got to be careful with trading around the news, if it was a really strong number, and I think the number that was forecast for NFPs was 735,000, and it came in at 200 and something, so completely missed the mark yet again. And that was on adjusted numbers for the previous month as well. So the other month it was over 1,000, and then it came back down, and it was over 1 million. And it came back, the adjusted number, and now it's come right back down again to 200,000. But look at the price action that we've had all week. It was like watching paint dry, a bit like the week before. And a bit like the week before that as well. So we've had 3 weeks of very drawn out. It's not moving. We don't have the momentum. We don't have the strong upside. And I think what you're seeing in the COT data, what you're seeing in the price action is reflected in the COT data. So price action is first. That's what it's showing you. It's not that it's a huge amount there. It's just gradually grinding up. And for anybody who's following my Telegram group, I've been putting the levels of resistance in, and we expect it to be a hard grind up with plenty of headwind, and we're certainly going through it. So we came up and hit the up around the 1833, 1834 level, which was, as you can see, this level over here. And we're just at this level again. Now, will we have a bit of a pullback? We've got a golden cross technical side coming in. We've got a golden cross happening up on the daily. Always a good thing when you've got a fast moving average crossing over on top of a slower moving average. In this case, it's a 20 EMA crossing over a 50 EMA. That is a golden cross, which is an indicative long signal. The other things that everybody else has touched on the fundamental side is the COT data. Whilst not strong, the seasonal data is strong, but with a caveat in that, in the month of September, there's a bit of a turbo week where we do see a bit of a strong move. What actually triggers that, I'm not too sure. It's just always around the middle of September that you see a bit of a pullback and then a very strong move up in September. Whether that will happen this year, I can't tell you. I've just given up trying to give really good ideas. We're just taking it one day at a time. The Aussie dollar, the commodity currencies that are going with it, one of the things that is really interesting, I was reading earlier this week, is that last quarter and $55 billion profit in the mining industry for the Aussie dollar. Part of that was gold. So we've got a really strong gold industry happening here in Australia, which obviously is now being seen in not only just gold spot, but also in the Australian dollar. Obviously, it's not in isolation. We've got coal, iron ore, I'll just trip over my tongue. Coal, iron ore, oil, gold are some of our top exports anyway. So when you put all that into the pot, sorry, Geoff?
Foster's.
I think Aussies are renowned for drinking the profits anyway on that. But yeah, that aside, that's always a good one as well. I was talking specifically resources, but that aside, but you see how that is all starting to all tip into a melting pot of, hey, this is not a bad thing to be jumping in on. As you can see, we had the move, close of trade. Obviously, there was a bit of a pullback as it came into this strong resistance area. I would imagine we might have a bit more of a pullback on Monday before we have a bit of a hopeful push up again. Next levels are up around we've got to get through this 1835 area, 1830, 1835, and obviously the next one will be up around that 1860, which is where my cursor is just at the moment, just up around here. So that's what we're looking for. That's what I'm looking for, actually, coming into next week.
Cheers, Ainslie. Much appreciated. That's the glittering gold. We'll be back with Ainslie very shortly with the black version of that, the liquid